Alright, guys, this is Prime Flex, and I'm back with a video today. We're going to be talking about a strategy that is more meant for not scalpers this time, okay, but for people that want to take more candles in the market, okay. And when I'm talking about more candles, I'm talking about 10 candles, 20 candles in the market, okay. This is not your usual 3 to 5 candle strategy, okay. And it is a very simple strategy, and we're going to be using two indicators. We're going to be using a moving average and exponential moving average, and the CCI, that is the commodity channel index, okay, in this video. And the strategy is very simple, and I would not want to waste much time in this video, okay. So I think I made this video with the last comments which I talked about in my previous video in mind, about when someone advised me to stop posting strategies about 3 to 5 candles, which I think is is a very awful comment, and I have addressed in my previous video. And I just think, okay, so if the person thinks that you can if the person can't use 3 to 5 candles to trade, then I've made this video for that particular person, okay. And for everyone out there who also wants to use uh who also wants to use strategy that gives you 10 to 20 candles in the market, okay. So let's just get to using it, and I'll be explaining with the boom 1000, which works best for the strategy, okay. And it is very simple, okay. So let me delete these things, and we are going to be using the 5 minutes. We are going to be using the 5 minute, all right. And it is a very simple strategy, so let me just run you through the strategy. Now we have a moving average here. It is not the 200 and it is not the 100, okay. And then we have the CCI, okay. So you want to make sure you watch the video to the end for the indicator settings, okay. So let me just explain how it works. Now, I've always told you, when we are using our trend filter, okay, this indicator is going to be acting as our trend filter, okay. When we are using our trend filter, when the candles are above the moving average, it means the market is in a what? Up trend, okay. But when the candles are what? When the candles are below, when the candles are below the moving average, okay. When the candles are what? When they are below the moving average, it means we're in a what? We're in a down trend, okay. It means we're in a downtrend, a short term downtrend, okay. And that means for boom 1000 we want to be taking the small candles, and that means we are looking for a what? We are looking for a clear downtrend, okay. So that means we want the candles to be below the what? Below the 50 exponential moving average, okay. It is not the 100 moving average, it is not the 200 moving average, it is the 50 exponential moving average, okay, guys. So let's just get to using the strategy right now, okay. So now the first thing you want to do is you want to make sure you can see right here the candles are what? They are above the moving average. So we are not going to be trading in these conditions, okay. We are going to be trading when the candles are below the moving average, okay. Now, what is the first trade confirmation here? The first trade confirmation is the candles are below the moving average, okay. Once you see the candles below the moving average, the next thing you should be looking for is, you can see right here, we have two levels here. We have the 40 level and we have the 100 level, okay. Now, the thing you want to do is you want to make sure the market or the indicator touches the 40 level, okay. You want to make sure the indicator touches the 40 level, okay. So once it touches the 40 level, in the process of the indicator touching the 40 level, you want to make sure that candle did not cross the moving average above, okay. You want to make sure the candle did not cross the moving average above. You can see right here, when the market touched the 40 level here, you can see the market rejected the what? At the 50 EMA. It's created a wick at the 50 EMA level, okay. That means it is a resistance, okay. It is resisting to push upwards, okay. It is resisting to push upwards, okay. So that means once you see that, you wait for the what? For the close of a red candle. Now, this is optional in this strategy. You can either wait for the close of a red candle, or you can enter outrightly at the end of the spike, okay, at the close of the spike, okay. So you could see we got to 40 around here, okay. This big spike took us to 40, and then you can just enter in the next candle, or you can wait for the formation of this candle and then you enter at the next red candle. I hope you guys are following me. You can either enter after the formation of this spike candle that take you to 50, okay, or you can enter after the formation of a red candle to show you that the market is in a what is actually in a downtrend. Okay, so that is how the strategy works. Okay, so let me just show you one more trade using the strategy. You can see right here, this spike right here took us to what? Took us to 40. This first 40 right here, you can see this, the candle crossed the moving average, so we wouldn't be taking this. Okay, so the one we are actually going to be taking is this one. You can see this one right here, because the candle failed to what? Failed to cross the what? Failed to cross the 50 MA. It also showed a rejection at the 50 EMA, as you can see. And then, like I said, you can either enter at the close of this spike. That means you're entering at this next candle, or you can wait for the formation of this candle to the close of this candle, and then you enter at this next candle. Okay, now the take profit targets and the stop loss. Now this one we are going to actually be using the stop loss and the take profit. Okay, so that means they are not going to be, once we set a stop loss. Stop losses don't work on boom 1000 lower time frames. Okay, and the reason why we are going to be setting a stop loss is because, so in case we get a candle that goes above our entry level, okay, the stop loss triggers at the close of that candle, but it also closes our trade immediately. Okay, so we don't have to bother about the emotional downside that comes with, oh, I'm in a loss, let me hold and see if I'm going to go back into profits. I hope you guys are following me. So we are going to be setting a stop loss. So if I'm going to be setting a stop loss here, my stop loss will be what? At the edge of the what? Of the last candle. Okay, at the edge of that that spike that took us to 40 level, as the top is going to be my stop loss. So let me say my entry is actually here. Let me say my entry is at, I entered, I didn't wait for the close for a red candle to form before I entered. So I entered at 12738. Okay, that means my stop loss is going to be at what? A little bit above, that is 12740. And my take profit level is going to be what? The end of the spike. Okay, my take profit is going to be the end of the spike. This is the end of the spike here. That is at 12727. That means, how many candles did it take to get there? Three red candles. That means I've taken 15 candles off this market, and I was risking 2 points to get what? Over 11 points. Okay, that is like a 1 to 6 or 1 to 10 risk to reward ratio. I think you're following what I'm trying to say. Okay, so it is very practical. It's a very practical strategy. Okay, it is a very practical. It is not like your usual scalping strategy. Okay, so let me look for one more example, and I'm going to show you the indicator settings. So you can see right here, this candle here didn't take us to 40. It is the close of this one. The close of this candle, this red candle, was what took us above 40. Okay, so you can see it comes in either ways. Either it is the spike that takes you above the 40 level, or it is the red candle that takes you above the 40 level. In this case, it is the red candle that took us above the 40 level. So my entry is going to be around what? At the close of the red candle at this point here. That is what? At 12746. My stop loss is going to be above the red candle. Okay, so my stop loss is going to be above the red candle, or above the previous spike level. That is 12751. Okay, that means I'm risking 5 points for this trade, and my take profit is going to be what? The bottom of the spike level. This is the bottom of the spike level at 12731, and you can see how the trade just went. You see, it took about what? 1, 2, 3, 4, up to 5 candles to get to my take profit level, and I would have just taken my profits, and that is over 25 candles, and I would have just what? I would have just left the market. Okay, you could see how practical the strategy is. It is not your usual scalping strategy. Okay, it is very, very practical. It is very easy to follow. Okay, so let me show you one more example. I can handle one more example before I show you the indicator settings. Okay, so let me see. You can see all this right here are not trades you are going to be taking. Okay, because you want a clear touch at the what, at the 40 level. Okay, did we get a touch at the 40 level here? No, the candle is above. No, the candle is above. No, the candle is above. So you can see the strategy does not work, does not happen every time. Okay, you can see right here we get a touch above the 40 level. At this point, we get a touch above the 40 level. So let me use my crosshair to see. So this was the spike. It was this spike that took us above the 40 level. This spike right here. Okay. So that means my entry would have been here at this point, and my stop loss would have been where at this point, at the top of the what, of the candle, and my take profit would have been where, the bottom of the candle. Okay, that is 12513. Okay, so I was risking 3 points to get 8 points of the market, and that was two candles, that is 10 candles. Okay, two 5 minute candles. It took two 5 minute candles to get to my take profit level, and that means that is what, 10 candles. Okay, you can see how practical the strategy is. Okay, you can see right here as well, I have a trade here, and this one would have given me a better risk to reward, because which this is this, it was the spike. It was okay, it wasn't actually the spike that took us to the 40 level. It was this red candle that took me to the what, to the 40 level. Okay, so I'd have, my entry would have been at the what, at the close of the red candle, at this candle right, sorry, at this candle right here, this one. You can see the candle my green color is pointing at. Okay, and my stop loss would have been what, above the what, above the spike, can above the spike. Okay, and my take profit would have been the bottom of the spike, which is actually this one here. So you could see right here, you could see the massive movement. Okay, so the longer the spike, okay, the better your profit level. Okay, and right here I'm risking what, I'm risking just 4 points to get what, to get over 15 or 16 points of the market. I'm risking 4 points to get over 16 points of the market. You can see how many candles it took. 4, 5, 6, 7, 8, 9, 10, 11. Up to 11 candles. Okay, up to 11 5 minute candles it took, or to hit my, or to hit my take profit level. That is a very, very massive sell run. You can see it right here. Okay, so let me show you the indicator settings. Now it does not have a zoom level because the indicator does not move. Okay, it does not move. Wherever it is, that is where it is going to be. Okay, the indicator doesn't move at all. Okay, so let me, this is for boom 1000. Okay, it works better for boom 1000. That is why I've based my charts only on boom 1000. Okay, so let me show you the indicator settings. So you can see we're only going to be using two indicators. Okay, so let me just delete them and add them again. So the first one I want to be adding is the moving average. That is the 50 exponential moving average, and you are setting it to close. And the pixel, you want to make it as thick as possible. Okay, so you can see the lines clearly. Okay, then you click on done. Then you click on the F button and you click on your main chart, and then you look for your commodity channel index. And this is how you are going to set it. Period is 20. Apply to typical price, HLC3, and then the levels are going to be on the 40 and the 100. Yes, we didn't use the 100. I'll be using the 100 in my next videos to show you guys how to use the 100 for your boom 300 and crash 300. Okay, so this is for boom 1000, so we are going to be using only the 40. You can see, and then you click on you click on done, and that is it. Like I said, it doesn't have a zoom level. Wherever the indicator is, that is where it is going to be. The indicator doesn't repaint. Okay, so this is the best strategy for day traders. Okay, this is for day traders, this is not for scalpers. Okay, because most scalpers, how would I put it, they might not be patient enough to wait for a signal with this strategy. Okay, but day traders can wait for signals with this strategy. Okay, so that is it, guys. Thank you for watching this video. I really appreciate those that have been supporting me. Okay, thank you for watching this video. Prime Flexes, bye bye.